So today I'm gonna talk to you guys about drawdown strategy, which is gonna make it impossible for you to lose an account or to blow an account, per se. So in trading, there's many things we can't control. But what is the one thing we can actually control in trading? And I hope you answer this correctly. It is your risk. And our risk as competent traders is predefined. There's no such thing as I take these setups each and every day, but this time this looks really good. Instead of 1%, I'm gonna risk 2%. Now, as a profitable trader, that doesn't exist. Our risk is predefined. It's always the same. In terms of the strategy, in terms of the type of account, or the setups, but there's no feelings involved. Okay, and the drawdown strategy I'm gonna talk to you about, I mean, it's really gonna depend on your strategy, on your data, and your psychology. Because this strategy is gonna make your equity curve, like let's say you start here with your dollar amount, and this strategy is gonna make it, even if you're a massive losing streak, you're not gonna see this linear downtrend. You're gonna see something like this. Okay? And this is if you're minus 30R, for example. You're minus 30R and you only lost 10%. Now, how do you do this? I'm gonna explain to you and I'm gonna show you the maths, because there's no bullshit in this channel. So, for the strategy, let's say you take 4 trades and your predefined risk is 1%. So you lost 4 times, okay? And if you lost these 4 times, if you have a losing streak of 4, you reduce the risk by half. So now you're trading with 0.5%, half your risk, okay? And then take this another 4 times. And if you lose, again, 4 times that risk, you divide it again and you go to 0.25. And if that happens again, you go to 12.5, 0.12.5. This times 4, this times 4. Okay? Because that way, the line, like I said, is never going to be linear. It's always going to be like, you lost 4%. Okay, you lose 4R on 0.5%. You lose on 25, and you lose on 12.5. This is like the 4 stages of it. You can see at the beginning you risk 1%, and then the line becomes more smoother and less dramatic for your equity curve, because you're dividing the risk. And then you may asking like, how do I get back once I'm on a good streak? Well, you do that. You can either do it by once you made times 8 or times 10. But as I learned on the mentorship, you could do it as time 20. But this, we're talking about more on a personal account aspect. If you're going to prop firms, maybe you shouldn't follow this to the T. I mean, if it is your first account and if you really don't want to lose that money, you may want to adopt this. Or if it really is a big account and you really want to conserve it, and let's imagine it's with FTMO and they will never go out of business. Well, they are the most likely to not to, right? You'll maybe want to adopt this, but I don't do this in prop firms. In a personal account, yes, of course, because personal account, we gotta be professional, and this is the type of drawdown strategy an institutional trader would have. all right, because we don't want to blow our accounts. Like on personal, there's no restart button for us to play around, gamble, and then go at it again. Okay, there's no restart button. We're playing real money here, so you want to take this professionally, and you do, and like I was going with this. Let's say you're at 12.5, and you start to get a win streak, and let's say you have the rule of 10 times your risk. So with this 12.5, you made 1.25%, because you did like 10R results. Okay, this is all a mess, excuse me for that. So now, as you did 10 times your risk, you can pass to the next table, to the next break. I don't know how to describe it, but you move on to the next level. You move on to 0.25. You do 10 times to 0.25. You move on to 0.5%, and you do that. You do 1%. And if you're really on a good streak, and you're 1%, maybe you can adopt this. If you're really good, if you're 10 times 1% the risk, you can maybe adopt 2% and go for a little buffer and go for something more exponentially on your equity curve. In this way, you avoid. I'm gonna just clean some of this up. You avoid your curve. Like, let's say you're asking, why should I do like time 10s my risk? Well, because if you go back to, let's say your equity curve looks like this, and if you go back to the previous moment, you were on, I don't know, you're trading with 25%, and here you were trading with 0.5%. Here you're trading with 0.5%, but then you went to drawdown, now you're risking 0.25. Now you're probably saying like, I'm back at the levels I was at, so I should be trading 0.25 again. Well, no, you need, first of all, you need like a buffer for you to start risking again. Because if you go straight to the same bracket you was, and you get a loss, like all these wins will go for nothing, because now you're risking double of what you was doing. So for this, you took 4 wins to do this, but you did 2 losses to give it all back to the markets. Okay, and now we're gonna move on to the mathematical sense. So you know I'm not talking about bullshit here. So this should be your equity curve. Let's say you have 10k in your personal account, or let's say it's a challenge, and look at the curve. Like, this is from 0, this is from 10k, and this is on a massive losing streak. Like, all of this is losses. You can see the formula, it's all losses. And like I was saying, bracket of 4, bracket of 4, bracket of 4, and here I just stick to 0.125, because then you go to 0.6%, then you go for 0.3%, and I'm not talking about 60 or 30, I'm talking about 0.03%. Okay, really low risk, and you can do this, and you can make it impossible for you to blow an account. Because if you do 1% risk all the way, like, you know, the chart will be something like this, just as you get to 0, or then times 30 trades, no, times 40 trades, that's what's in here, you'd be at 6k. So right now you're here with this strategy, but if you would be on a losing streak with risking 1% always, you would be here at 6k. So massive difference, massive drop. You can see it all here. And how many trades for you to blow an account? Let's say prop firm challenge. Let's say you have 10% risk, 10% drawdown. You need 40 trades. 40 trades. And if you really want to devise all of this, I mean, it could be a lot more. If I take this out and I start to put 6%, and then I start to put 3, you could see how the numbers will not change. Will not like move a lot. Like we have a 10k account and right here we're risking about $3. This is how you stay in the game. Because in trading we want to survive, guys. Alright, look at all this. And this is only, I mean, you need to be an unprofitable trader for you to for this to happen to you, right? Because even if you're on a losing streak, I'm guessing you're not gonna be on a 40 loss losing streak. Because that way you just need to get back to the drawing board and you're not profitable and you need to work on yourself, work on a strategy again. But if you're a profitable trader, maybe you'll get to these levels or to drawdown 1 or to drawdown 2. I mean, it can happen. But then you just get back to it. And you're surviving in this game. And you're not blowing accounts, because you can blow an account even if you're a profitable trader. Even if you're risking 1%, you can lose 10R. You can lose 10R easily and still be profitable. I mean, it's normal. But losing 10% using this, way more difficult. But then it all depends on your strategy. Like, you gotta adapt this 4 times the risk, like, to your strategy. Is it normal for you to lose 4 times? If it's not, you can adopt this. If it's usually normal, then you want to put this bracket a lot more larger. Let's say if it's normal for you to lose 4 times, but if you lose 6, usually something's wrong. You want to adopt like this at 6. Let's say you want to do something like this. Okay, so you gotta plan it with your strategy, with your data, whichever it says, but you want to be doing something like this, at least on your personal accounts, guys, because there's no restart button, and you really should like take advantage of prop firms, but you don't get to build your personal account, because that's the most important way. And this information cost me hundreds of dollars, if not more, from courses and mentorships, and I'm giving it this and all the other things I'm teaching on my channel, all for free. Everything I know about trading. So might as well just subscribe if you're liking the content. And join the Discord as well, because we're giving daily analysis each and every day on EU, GU, Gold. And there's a lot of other people you can connect with and a lot of profitable traders. Alright, hope you liked the video and see you on the next one. Peace out.